Should we buy or sell Frontline? So first off, read this disclaimer carefully, and here is Frontline's website. They are definitively a shipping company. We are at 100% zoom, yeah. World leader in the international seaborne transportation of crude oil and refined products. Yeah. 23 VLCC, 29 Suezmax, 20 Alframax. Okay. I have put Frontline in these other themes in the oil tankers business. We are 82% from the 52-week low and 25% away from the highs. We start here with the charts, and we can go pretty far back. Looking way back, you can see that we are still very far away from the all-time highs. So you could argue that there's upside based on very depressed situation in the market, especially relating to oil tankers. And from these very low levels, very big rallies can come. We have seen a significant correction from the recent highs. When we go here to the daily data points, we are goofing around this red 200-day moving average. It's a key support level. We are seeing some rejection here from the light blue 5-day moving average, but that's not like really a big deal. You could also argue that the green 50-week was a support level. So all in all, interesting setup here for a potential bullish trade. Looking at the RSI, we are at a level that is interesting. The PPO, the purple 20-week PPO in particular, also this level has been bought recently, but it's not like a screaming buy. Looking at the daily data points, looking at the MACD here, we are very low. We usually see some rebound from these low levels. Looking at RSI, we are bouncing from RSI support, that's bullish. And in terms of these PPOs, usually these low levels results in mean reversion to the upside, which would be very much bullish in this case. Just to go back to where we recently fell from would be 34-ish% rally. So in my notes I write 200 DMA support. I think I will give the bulls, I give them a 4 on the technicals, and that is because we don't have like a clean bounce from the 200 the daily moving average. I would ideally like to see us not break it. But we are around that indicator. You also have the 50-week moving average, but I prefer the signal to be a bit cleaner, so that is why it becomes a 4 instead of a higher number. Let's look at the seasonality for Frontline. To the left here, the last 10 years in red, 7 years in blue, 5 years in green. The seasonality is usually bearish into the 12th of January. Looking here to the right, January usually is a pretty darn red month. At least if we go back to 2016, it's been pretty bad. So far, we have an 8% loss for January, which means that a lot of the downside could be priced in, but 2016 and 2020 were substantially weaker. In this case, I give -2 to the bears on seasonality. Next, we will look at the fundamentals. Okay, so here is the price book ratio in blue, and we go back here to 2017. Yeah, historically speaking, we're not like extremely high, but we are high. We are in the upper end of the spectrum, looking at price to sales ratio here in copper color. We are at a level that has a bit of an occasional, it has a tendency to be bought, but historically it's elevated. Looking at price earnings ratio is also seen a bit of a lift off. The yield, yeah, if we go here, look, no, we can go here like this. In this case, you can see that the yield is 5.39%. So that is the dividend yield. That is a very good yield. Now, there are 10 analysts covering the stock with a 1-year price target. The minimum price target, minimum price target is 26% above us. The average is 60% above us, and the max is 107% above us. And here are some additional fundamental data. So taking it all together, I do think I will give the bulls a 7 here on the fundamentals. Quite a bit to be happy about. A very good yield. You got decent valuations, and the analysts were really feeling for the upside. Let's look at relative performance. Long term, we do have 4% correlation with S&P 500, so basically no correlation. 40% with crude oil, minus 15% with the dry bulk ETF, which we expected it to have a strong correlation with. Looking at daily data points, 9% with S&P 500, minus 71% with crude oil, and minus 76% here with the dry bulk index. So the relationship here with crude oil is definitely interesting. So it's a negative relationship. It means that if something is bullish for crude oil, it usually is bearish for Frontline. In this case, you have seen crude oil correct substantially, which means that crude oil could potentially be a bit at support. And if there is a negative correlation between the two, that is not necessarily a good thing for Frontline. So let's look here at the seasonality. So the seasonality here is rather, well, it is bearish for crude oil into the end of January. February, as you can see, is a very strong month here to the right for crude oil. Very few months are have been red over the years. So yeah, that could potentially become a bit of a challenge for Frontline. Now let's compare Frontline with CL, like this. CL, crude oil futures, like that. Okay, we start here with the weeklies. So Frontline has underperformed crude oil for a long time. There's might be some time cycles here. So let me just get my handy tool out to investigate a bit further. There's some kind of time cycles, but the duration of them have not been stable. But Frontline has recently been systematically outperforming crude oil. If we go here to the daily data points, it's pulled back now in this relationship to a potential support level where Frontline has a bit of a tendency to begin outperforming again. Looking at the seasonality here, it is pretty good for Frontline into, mid to late-ish January. To the right here, you see that January usually is a month where Frontline underperforms crude oil. So that's the difference between averages and looking at this table view, because if you look here at the sum, you see 1%, but when you get the entire table, you get a more nuanced picture. So in this case, I think I will give this a bit to the bears. I give the bears -3, not massive, but we end up with 1.5 in favor of the bulls. We are at 200 daily moving average support. That is the key entry signal, and also a bit of a stop loss level. By the way, dry bulk is it's a raw material that is shipped in large unpacked parcels. Dry bulk consists of unprocessed materials that are destined to be used in blah blah blah. So it's iron ore, coal, grain, bauxite, sand and gravel, and scrap metal. There is an ETF called both now, that is the global shipping ETF, but it is more recent than the dry bulk ETF, so it's harder to do those correlation studies. Anyway, we do have some time left. In this case, I think I will look at other Yeah, other stocks related to transportation. So let's start with cars. Ford is the first one that comes to mind. Ford is again bouncing from the red 200 week moving average. So it is a nice level to buy Ford. What I don't like is that Ford is really beginning to test it a bit too much. If you look at this, here Ford is testing it and things are okay. Here we test it again, but you can see here these two candlesticks. Uh, these two, they do actually slip a bit below the support level. So it's getting a bit dangerous. So the red 200 week has gone from being a strong bounce level to now being more fragile. And because of these two candlesticks, people are more timid about the 200 week. It's not a high confidence level. But anyway, Freud is at support. Seasonality, it's a bit a bit weak for Ford here. Let's look at the valuation. The price book ratio is not that bad. Price to sales, it's a bit higher than it has been. Yield is 4%. Yeah. Let's continue on. Another type of vehicle, if we talk about transportation, would be Boeing. They make a lot of aerial transportation vehicles, airplanes, helicopters, and they are also in the space business. Very strong rally here, though, from Boeing. If we measure from this low here to the recent high, that's a healthy 75% in a relatively quick time. Let's look a bit here at RSI and PPO. Ooh, getting a bit dangerous here with weekly RSI and the PPOs. Looking at the dailies, ooh, really getting overbought here. That doesn't mean it is inconceivable for Boeing to go higher in this rally, but it's starting to really get dangerous. This is not like a level where it makes sense to put on new big bullish positions. Seasonality is bearish. That's not improving the odds for the bulls. We are currently at 11% gain for January. However, in 2018 and 2019, we were actually substantially higher. But historically, looking at all of the January data, we are really, really pushing it from the bullish perspective. Let's look a bit here at the valuations. Wonky data here on price book. Price to sales ratio, it's on the higher end of the spectrum. Let's look here at what the analysts are projecting or forecasting for the coming year. So there's 22 analysts with a 1 year price target. Oh, okay. So the max is 17% further upside, but the average is 4% below us. Minimum is 43% below us. So definitively, Ford is a bit of a bouncy stock, maybe some upside. However, I really didn't like how Ford keeps testing a support level instead of forming higher highs and higher lows. And Boeing, on the other hand, really playing a bit of a dangerous game here. Really overbought, massive rally. Seasonality not that good. Fundamentals, especially the analyst 1 year price target, was very bearish. So Boeing is looking very shortable, or other types of bearish trades. So yeah, there's a lot of things happening now in the transportation sector, and yeah, I think that if you want additional data, you definitively should go to diamondarm.com and get that VIP access. You just fill out a form and then you are put on a waiting list. I currently use a waiting list simply because the current content I have there, it's a bit leaning in the direction of being for people who have an average understanding of the market, but I will add information that is from like the total beginner or to the more advanced participant in the market. And at that point, I will just open it up to anyone, because then there's not going to be any kind of issue. But currently, some of the content could be a bit on the higher end of the spectrum for those who are completely new to the market. So they won't. So that's why I just ask a few questions after you fill out the form. But in the not too distant future, I will have all of the beginner content there, and then it's not going to be any kind of issue. So yeah, definitively a place to go. And if you like these kinds of videos, they are more advanced. So if you like these videos, you definitively will like everything on the diamondarm.com VIP access page, because these videos are definitively not like beginner stuff.